dollar yen. What you got for me, dollar yen? Again, we're looking lower time frames today since the higher time frames aren't doing much. Dollar yen, we're looking for a break above this level. A violation, I think I should say. It looks like we got it. And we spoke about continuation opportunities to a conservative level right here. A secondary conservative level right here. And then your final level being right here. This is going to be another one where we may have to go down to a lower time frame, and let's see. Ooh, this is going to be a Fibonacci inversion trade on the range bar chart. What's our 11? I can smell it. I can smell it. I'll explain exactly what I mean. This is dollar yen. Let's stay on the 8 range. This is going to be a fib inversion trade, I bet. I bet. Yep, look at that. You probably even get a closer picture on the 5 range if you want to use that. Let's want to see what's a better visual for us. Yeah, okay. So I'll walk it back a little bit. So we have our violation right here. And now we have our pullback. Now, what I was able to recognize, just because I've spent entirely too many days and years of my life on charts, is the fact that we have this little pullback here, which is probably going to go unnoticed, but it's going to be important before moving up. Then we have price action pulling back again in the true pullback. So this is what I love this technique on when I was a day trader. This is called a Fibonacci inversion trade, where basically the market gives the impression of it violating a trend and basically tricks people into thinking we've now come into a bearish move, when this is really just the true pullback of the normal move. And what you do is this. You can do this on a lower time frame. You can do, I like the range bar charts because that was my preferred time frame, but I'll stick to here for you guys. Let's say we go down on a 5-minute chart. You can see that pullback a little clearer there, right? So here's what you do. You take your Fibonacci extension tool. You take it from the swing high. You invert it backwards to the mini pullback right here. And then you go back up. And the key level you're looking for is that 1618 Fibonacci extension level. You also take a Fibonacci retracement tool. I used to call this the Fibonacci matrix. From your swing low to your swing high. And you look for any signs of confluence. Now, ideally, what I wanted to see the 618 line up with the 1618. This case, we don't have it. This case, you have confluence up here at the 127 in the 618 Fibonacci retracement. But I like to see the 618 lining up with the 1618 and then coming down to a level of structure. And the idea is that if price action continues down to this level, good place to buy for a continued move up. And the risk reward on this, if you're a trend following trader, and I'll draw it on a little bit, is going to be crazy. Now I am curious real quick. This one we do have like a complex pullback. I'm curious to see. I bet this AB equals CD is going to come right at that 127. So in this one, everything is lining up with the 127 618 level. So AB equals CD pattern, 127, 618. And let's say you use this higher high, higher close as an entry, right? So what you're doing is this. You're looking at this as basically a complex pullback. Again, my preferred level was down here to 618, but you can suppose you can do it here as well. So let's say you're using a 3-bar reversal, higher high, higher close as your entry reason, right? Different ways to shoot for targets. One, right? In your traditional kind of conservative trend continuation fashion, you could shoot for a retest of the highs. We'll get stops in ATR below. ATR is 7. Sorry for the junk here. That's going to be 49, right? So you're looking at something like this. The bigger targets, right, are the bigger projection. So again, we spoke about this when we looked at it on the hourly here. Give me 1 second. We spoke about it when we looked at the hourly, right? We had a few different areas that we drew out. We had an area right here. We had an area right here. And we had an area right here. So there's a lot of junk here. I apologize because it's small. I'll go down to a 15. Maybe that'll clear things up for you. But considering the higher levels that we're looking for, when you're looking for that extension, you're looking for a move right up here about 133.23, which gives you that 3.65 to 1 risk reward. You can look for a secondary or a third, depending on where you're if you're doing the conservative first one or not. But you can look for targets here, here, and here if you're someone that's looking to break up that position and really buy and hold this thing. So these are some of my favorite opportunities. Of course, here you have the 113 even handle too if you want to be more conservative. But these are some of my favorite opportunities in the market when I used to day trade. Something else I would add to that with the target was looking at the 127 Fibonacci extension and the equal measure move as always. So Fibonacci extension, swing low to swing high and back up. You have a 127 right at the 133 even handle. 1618 right below that first target level or that higher target level we're looking at. And then of course you won't notice until we start turning around, but you compare that with an AB, a 1-to-1 measure move as well. I just gave you guys a bunch really quickly. I apologize. Do you want me to redo that again or anything? Any questions about that? It really brought me back. I hopped in the time machine. Now again, my preferred one was the lower level. So this wouldn't be a trade for me. Even though we have so much lining up here. It would be this level right here, this shelf right above right above 132.46s. That would be the ideal level for me. So looking for my entry somewhere in this area, getting stops right below our trend violation point gives me that safety. And then again, looking for me, first targets at a retest of the highs, get some off the board, and then using those other entries for the rest of my positions. George claps his hands. Well done. Yeah. I would do this all in the range bar chart. The range bar charts, you get a little bit more wigglage. The 5-minute actually looks just as clear, if not clearer than the range bar in this case. So I figured I'd keep it on. Plus, I know most people don't trade range bar charts, but yeah, good old Fibonacci inversion trade. Good old Fibonacci inversion trade. Basically trading the trend violation fake out. Looking at the micro trend being violated, however, the larger trend staying intact. And looking at the market, baiting people to be like, hey, I'm getting short, I'm getting short, I'm getting short. And then using those short orders to boost the longs. Refreshing.